folks, Scott here, and this is the wrap for Friday, June 7th. So, unfortunately, I am not going to be able to do a tip. I've done tips 99.9% of the days over the past 5 years. I will not have a tip going into tomorrow because my parents are on the way to pick me up. We're going to try to beat the tropical storm going up the East Coast to get to my niece's high school graduation tonight. So, I'm in a little bit of panic mode here, but I want to get this video done, at least explain my thought process on today's gaps. And as always, I'll have additional research for our members in the morning, and our gap guides worksheet and all of that will be posted. Worksheet will actually be posted sometime later this week, and count on Sunday afternoon. Normally I post it on Friday evenings, but not going to be able to tonight. All right, so this is the current action. In fact, let me... Well, a couple of things. I will say this to think about in terms of a tip. Whether we close above or below the 10-day moving average and whether or not this gap fills today or not is going to play in a lot to the odds of what's likely to happen on Monday. So just recognize that, again, where we close relative to this 10-day moving average and the 20-day moving average even, as well as whether or not we fill this gap, it's going to have a big impact on what the probabilities are for Monday, I believe. So those are the things I'll be looking at, as well as data on post-Monday jobs report, post-jobs report Mondays as well. All right. So going into today, let me show you what the worksheet showed. It showed a gap up, and this is just the average of all 8 individual indices gap guides. Showed a gap up was 50-50 in terms of win rate using our MTG stock parameters, but has been slightly attractive in terms of profitability. 1.25 means it's made 25% more in profits and losses. In terms of unique day factors, this was the day of the monthly jobs report, all-important report. Historically, the sample sizes are small, and you must discount these numbers because of that. Up gaps have been okay for the past 10 years. Monthly jobs report. There were no unique patterns in play based upon yesterday specifically. I'm not going to show you the individual gap guides. You'll see my comments here, which summarizes them. The win rates were just 50-50, even though they were generally profitable. So I was really not interested in fading the gap per se because it didn't meet my rules. However, when I started looking at this other data, like that day of monthly jobs report data point I just showed you, not unlike last night, which I showed it in the nightly wrap, up gaps after an intraday dip below the 50-day moving average that closed above the 50-day. Those have been that's really a neutral setting when you consider MTG stock parameters. If Fridays, it's been problematic. But here's sort of the big but. I ran a bunch of studies relating, and specifically to this one point, closing significantly higher than the prior close or significantly higher than the prior session's low. So this is just one example, probably 10 that I looked at. And that late strong rally yesterday really increased the chances of getting gap fill today, and that's what I say here. 74% win rate after closing 1% higher than a session low and still being below the 10-day moving average but above the 200. And no matter what I did to what zone, what gap size, whatever, it just was all positive. Even Fridays were profitable. So if the market had been more stable of late, been more normal times, then I'd probably done this with a short at today's gap with a speculative trade. But I did not. And what I said here was basically neutral probabilities per the gap guides, mostly positive factors for up gaps, and this huge rally yesterday greatly increased chance of a winner today. So though I'm not fading the open, I'm more inclined to take range breakouts to the short side than normal. I did not say I wouldn't take the long side. I just said more inclined to the short side. That's my bias going into it. So let me show you the 5-minute action. I got Russell top left, NASDAQ bottom left, S&P top right, and Dow bottom right. Unfilled gap, blue lines of prior day's close. We came down, sold off a good amount, about 7 or 8 points for partial gap fill. But then bulls reversed it, so did not fill the gap. Did fill in the Russell, missed it in the NASDAQ, missed in the Dow. If you look at the ETFs, they missed it as well because the futures rallied yesterday, so they even had a bigger gap to fill. Russell did manage to fill, but that's it. So far these gaps have not filled, so it was it's actually premature to say it was a good decision. Whether to fade the gap or not, though I'm very happy and pretty confident that it's going to end up technically being a good decision to not fade. And what I mean by that is that we have rallied to 1639.50. We opened at 1633. That's a 6.5 point move. My stop today per our gap guides, I will show you that, which is generally what I start with. Whoops, not there. Gap guides, ES, I trade the ES primarily with 7-point stop. That's equal to 30% of the 5-day average true range. And Geeknote, that's the cash index. So it would have survived by 2 ticks so far. This looks like a pretty tight consolidation. Looks like bulls remain in charge. Odds are it's going to continue higher. Now, 15-minute numbers came out. I was interested in taking the 15-minute low breakout. Didn't happen. And the 15-minute high breakout was attractive per the numbers, but a little bit more marginal, especially when I look at our advanced studies, which are available on our website for purchase. They showed that the 15-minute high breakout on day of the monthly jobs report has been problematic historically. So that was enough to keep me on the sidelines on the high breakout. I told people I would do it though with a pullback. We just never got the pullback before it hit its target. So it's a 4.5 point, 4 3/4 point target, hit it. So that was a little disappointing. I missed that. Some members did report taking it. I did not. The high breakout numbers look pretty good this afternoon. The low breakout looks fantastic. I told folks on that, sort of the same issue. Would prefer to take a delayed entry since I'm traveling. I'm not, but I will do a modified high breakout. And what I'm doing is I've really turned it into a discretionary trade where I'm going to target the 4.5 points, but I'm only using a 3-point stop just to get below there. So the point being, decent chance it rallies, pushes higher, becomes a winner. If it doesn't, then I didn't want to try to predict where the stop needed to be because it could come down here and get a little bit volatile. So I'm long right now, 4.5 point target, 3-point stop. May have to close out here before I hit the road, but I'm hoping we'll get a little pop here until lunch. So there you go. Again, apologies for not having a specific tip for today, but we'll get back on it on Monday, and have a great weekend. Take care.